right, so there's a accident like right up forward in front of me, and then there's a ambulance coming here, and I don't know what's going on. I don't know how bad it is, but it looked like somebody went on the cross out. It looked like they really messed up. I don't know what happened up there, but we're finding out in a second. We're gonna find out in a second what happened. What'd you do? All you had to do was just drive straight, and you couldn't handle that. It's just ridiculous. But these people are always messing it up. What happened? Let's see, what happened? Uh-oh. Oh, it's a goddamn camera. It's always a camera. I mean, an Ultima. It's an Ultima. It's always an Ultima. I don't know what's wrong with these people. All you had to do is just drive straight. It's ridiculous. I'm going to make a very, very short video. So today, NVIDIA, faster than I could have even possibly imagined, joined the $1 trillion club. So there's only a handful of companies in the $1 trillion club. Number one is Apple, and Apple's actually worth $3 trillion. Then you have Microsoft. Microsoft's around $2 trillion. And if I go back, I can actually look. We could look at the valuations of the rest of these companies. What is it? NVIDIA, as you can see, is over $401 per share. It was actually at 405 or 406 at the opening bell this morning. Its market cap topped $1 trillion this morning, and it pretty much stayed there for most of the day. Short sellers who may have sold out of the stock have lost over $4 billion within the last month. Because as you may have noticed, NVIDIA's trading frenzy for AI stock and AI chips and all this, that has been very recent. That's been within the last 2 weeks. So a lot of people have been jumping on the AI bandwagon. And the thing about it is artificial intelligence has also pushed up the stock price of Amazon. It's also pushed up, as you can see, AMD. It's pushed up, I can't really say Intel, but Intel right now is a bargain if you want to buy chip stocks, because you got to remember, Intel makes, as far as I'm concerned, they make the best microprocessor CPU that there is. And AMD is number two. You know, AMD makes Ryzen and everything, but I don't really like their stuff because it just feels cheap. Like, yeah, they make these really powerful CPUs, but the problem is it feels like their CPUs just aren't as refined, in my opinion. I personally like Intel a lot better. Some people might say, yeah, it's personal preference, but the reality is Intel makes better CPUs. If you look at the top performing gaming CPU, for example, you're talking about the 13900 series. You know, the AMDs are, brute force, but to me, they just feel cheap. I'm sorry. But anyway, I'm not even going to talk about that. As you can see, Amazon is another $1 trillion company. Google is another $1 trillion company. So basically, there's a list of about $7 trillion companies. Now, what about the future? As far as I'm concerned, Tesla is going to $1 trillion. As long as Elon Musk doesn't do anything stupid. Right now, they're at $637 billion. And the thing about Tesla is they have very low debt compared to all the other automakers, and Tesla really is more valuable than pretty much every other automaker that you could name. But, my issues with Tesla come from, the shoddy workmanship and the interiors suck in their cars. But for the most part, Tesla is on a roller coaster. And if you own Tesla shares, you're better off not shorting them. You're better off buying more, holding. Elon Musk has promised he's going to start delivering Cybertrucks. God knows if that's going to happen, but I think it should soon. He also claims that they'll have a delivery date for the Roadster coming up. I don't think the Roadster really matters, because when you're talking about a car that's over $200,000, I really don't think that that's as important as regular consumer cars like the Cybertruck, the Model Y, the Model 3. And then they also claim that they're making a Model 2 or something that's smaller than the Model 3 in order to serve people who can't afford the $50,000 or the $39,000 starting Model 3, or that they can't afford the long-range Model Y, the Model 3, because those are around 50,000. And some of the people who really wanted a performance Model Y or Model 3, those are around 70,000. They're claiming that they're going to make a smaller car than the 3. And the way I see it, if they do that, considering what Tesla has shown us about how they've manufactured their assembly lines to make it cheaper and faster to build cars, let me tell you something. And I mark my words right now. As much as I talk bad about Tesla, the reality is there's a lot of people who want to buy into Tesla, and right now they're waiting for this next model. I think the 3 and the Y is as small as I'd ever go, but I'm not buying any of their cars anyway. But I'm just saying that if they're making a smaller version of, say, the Model Y, or a smaller version of the Model 3, because they haven't unveiled anything yet. But if they do that, you can bet that this stock is going to blow up. It's literally going to blow up, because you also got to remember that they're shipping these cars mostly China. They're building these cars China. They're shipping them around Southeast Asia. The Model 3 and the Model Y are poised to take over a large percentage of the market. And that's just what it is. So my thing is, right now Tesla is down, but this is, as far as I'm concerned, this is a good time to be buying. It's just like with NVIDIA. Before NVIDIA shot up suddenly, and by the way, I could have never imagined that NVIDIA was shot up the way it did. But with this AI technology, with this AI and ChatGPT, because NVIDIA has had AI on the markets, on its cards, since like at least the 2080 Ti. I remember when that card came out, like when I had a 2080 Ti, they were talking about not only ray tracing, but then they were talking about DLSS, which is basically an artificial intelligence algorithm which is able to create more frames, and it gives the gamer a better view of what they're looking at in the video game. It gives you more frames per second. But on top of that, they had artificial intelligence for their sound chip. So they made it so that the video card could actually process sound in some cases. And what it could do is it could make the sound better. So they had artificial intelligence audio sampling. And then you got ChatGPT, and ChatGPT has been powered by NVIDIA. And then on top of that, they're doing all types of things over there at NVIDIA. Jensen Huang, he's holding up video graphics cards and everything, and he's literally getting kids to pay $2,000 for a video card. So the reality is, my point in talking about all this is really to say that, my index is up. And especially today, like when I woke up this morning, like I was showing my portfolio to some of my investor friends. And I was up before the opening bell. I was already up like $445, and that was before we even really started trading. That was before 9:30. That's basically where we are, I would say. So the way I see it, and by the way, you can do whatever you want with your money because it's your money. You can do whatever you want. But my thing is, I'm going to continue investment in AMD. I'm going to continue buying Intel while it's cheap. Because, see, the thing about it is Intel's basically... I feel that right now that they're undervalued right now. That's how I feel about it. Now, these, I listen to, what the bigwigs say. I listen to what the quote-unquote professionals say, except Jim Cramer. I don't trust that guy at all. But I believed, and I've been saying this for the longest when I was talking about betting on chips, I believed in TSM. I believed in AMD. I believed in NVIDIA. And they have not proven me wrong. If you had invested in those when I told you to, and you sell right now, you're up. And you're up, you're in the green, you've made money. And it's just that simple. So me personally, I believed in them and they have delivered on my belief. Some of the other companies that I'm steady investing in, specifically these dividend payers, the automotive stocks, Ford, GM, Tesla doesn't pay a dividend, but there's Ford, GM, and Stellantis. On top of that, I would say, what else? Berkshire Hathaway. I still continue to invest in Berkshire B, not the A because it's too expensive, and I like to hold whole shares. And I think Berkshire B, I think I'm going to hold on to that for 10 years and see what happens. Because, first of all, I doubt Warren Buffett's going to be alive in 10 years. But the way I see it is Berkshire could easily, possibly go to $1 trillion. And Berkshire is the type of stock that when people get that stock, they don't sell it. They pass that stock down to their family members. They do not sell that stock. They buy more, and they don't sell that stock. They keep that stock. They've kept it since the 90s. You don't short Berkshire Hathaway. Other than that, off the top of my head, those are really the main things. Because, see, I have my own index fund. It's Mangoat, Microsoft, Apple, NVIDIA, Google, oil stocks that pay dividends, Amazon, AMD, and Tesla. So I have my own index fund. And the reality is my personal style of investing has served me extremely well. I guess the only thing that I should mention, because I love, taking shots when I can, is I want you to notice the fact that Bitcoin and Ethereum, Litecoin, while NVIDIA and AMD and TSM, while these stocks have risen steadily, the cryptocurrencies have not benefited from the AI craze. Now, there's a number of theories as to why that is, but I personally believe that the AI craze right now is being driven by people who are trying to get in on AI stocks, and money that they normally would have put into crypto, they are diverting into the direction of AI technology. So right now, any AI stock is starting to rise based upon what we're seeing. It's like every single stock that's talking about how they're doing AI in their company, all of those are rising. But the crypto market has not moved along with the tech market in this sense. Bitcoin is still floating around, what is that, 27,000? And they're having such a hard time getting to 30 and staying there. And it seemed like the only thing that was pushing Bitcoin higher was the failure of banks that were investing in Bitcoin, like the ones that failed within the last 3 months. So I just wanted to put that out there because it's something that I noticed. I really think that most of these people, what they did was during COVID, they pulled their money out of the stock market. They captured whatever gains they could. And then when they felt that the water was calm or calming down, I think that's when they started getting back in. Now, see, me, I believe in that old saying where they say, when there's blood in the streets, buy, buy, buy. So as soon as COVID hit and I saw blood in the streets and literally bodies in the streets, that's when I started buying up oil stocks because they hit negative. That's when I started buying up banks. That's when I started buying up tech because all of those had crashed. So my guess is that these people are repositioning their money. And right now they're focusing on AI because that's the big thing rather than focusing on crypto. So I just want to point that out. Now, that's not to say that, that some of them won't still dabble and gamble in crypto. No, absolutely they will. But my thing is focus on the stocks that pay dividends. You can't go wrong. Now, here to focus on what dividend stocks you could be buying, you would see right here, you would see my list of the personal dividends that I hold. These are the companies that I hold that pay dividends, right? Apple, Microsoft, these are obvious because these are at the top of everybody's list, I would say. Sanofi, Gilead, General Electric, Nike, Citigroup, JPM Morgan, These are the banks. Citi is Citigroup, Capital One Financial, Wells Fargo, Bank of America. As you remember, Logitech. Now, I had told you to buy Logitech at $50. Logitech rose to like 100 and something dollars, and then the buying kind of cut back after we came out of COVID. But it's still at 65. So if you did buy it when I told you to buy it, even if you sold now, you're still up like $15. So it's still a win, even if you didn't sell at the $100 mark. Electronic Arts, Nvidia, obviously. Sirius pays a dividend, but when Warren Buffett, when he purchased into Sirius, or at least the last, what was it, 2021, Sirius was at $5, but you got to remember, Sirius still pays a dividend if you're holding their shares. Exxon, BP, Sunoco, these are the gas companies. Chevron, AT&T, Walmart, Verizon, Visa, MasterCard. These are definitely good to have because they do pay a dividend. And as you know, this entire nation is drowning in debt. So for the most part, using credit cards is something that they just do. Ford, Shell, American Express, yet another credit card. Occidental Petroleum, Valero, General Dynamics, Lockheed Martin, Raytheon, Emerson, Nextra Energy, Dover, Sherwin-Williams, Coca-Cola, Johnson & Johnson, Newmont Corp, Gold is the stock, FCX, which is Freeport McMoran, Northrop Grumman, another military industrial tech stock, General Motors, as you can see, $33.36, and of course, Intel. So these are my dividend payers. And what you're basically looking at my Charles Schwab account. That's why it doesn't look like the TD Ameritrade account. The Charles Schwab system, I don't like using it as much as I like using TD Ameritrade. But they do have a couple of different ways of presenting information to you because I guess they try to make it look more official for old timers or something. But you can customize these things and you can create your own lists in your own desire. And they also have a heat map, so they can tell you very, very quickly at a glance what's up in the green, and they also tell you what's down. And one thing I have to say about the Charles Schwab system is that the one thing I do like, well, I'll say two things I like. For one thing, I like the heat map. And second of all, I like the fact that they show you your dividends. So however many companies you have that are paying dividends, what the Charles Schwab system does on the app for Charles Schwab, what they do is they tell you how many companies you can expect to get paid dividends from. And then as the year begins and you start to collect dividends, it tells you how many companies are still expected to pay out. So if, let's say you're expecting $1,000 in dividends, right? It'll tell you that you're expecting $1,000 in dividends, and then it'll tell you how much you've collected out of that $1,000. So I actually like that. So this way you know in the year exactly what you're expecting to get. A lot of people keep asking me, I guess they're new here, and they keep asking me about what platforms do I use. So for the most part, now I use Charles Schwab and E-Trade. I was using TD Ameritrade, but Charles Schwab bought TD Ameritrade, and then they merged my accounts from TD Ameritrade into Charles Schwab. So now everything's Charles Schwab, and then there's E-Trade for some of my older stock purchases that I held. But once again, if you make a list of all the companies that you want, and then you single out the companies that pay dividends, then those are the ones that you should be investing in. And if you put, let's say, $1,000 into each one of those companies, eventually you're going to get to the point where you've got $5,000. Then you're going to have $10,000. Then eventually you'll have $15,000. Someday you might even have $50,000 or even $100,000. That doesn't necessarily mean you have to have 100 stocks with $1,000 put towards them. It just means that if you keep investing on that level, eventually you'll have a $100,000 portfolio. Because once you have a $100,000 portfolio that's gaining dividends, that's when in a year you can talk about possibly having 2 or 3,000, maybe even $10,000 coming back at you in dividends. Now, in order to have a $10,000 dividend account, yeah, you're going to probably need more like $250,000 worth of stock shares that you're holding. I've seen some estimates that say you may have to have $1 million or $2 million or something in order to get $10,000 back per year in dividends. For some people, that's not impossible because, a lot of us inherit money. Some of us make big sales of real estate and we get money when the market's up and whatnot. So it's not impossible. But if you're the type of person who invests the extra money you have at the end of the month, then you can gradually build a portfolio. Because, see, I've been at this on YouTube for years, man. I don't even know how many years because I went through most of my videos a couple of days ago. But I've been at this for a while, like just talking about these stocks and these dividend stocks. Because, see, I don't do options trading. It's too much of a casino for me. I prefer to buy and hold. And when you're talking about these big companies like Microsoft and NVIDIA and Apple and everything, I think we can see already that strategy is paying off. Meanwhile, all of my crypto bros who focused on crypto, most of them, well, you don't hear them talking about it too much. You don't hear the ranting and raving about how high their portfolio, how many percentage points their portfolios. You don't hear them talking about going to the moon lately. You don't hear them talking about the moon. You don't hear them talking about Jupiter. You don't hear them talking about Mars and Pluto. You don't hear them talking about those places lately. Because the simple fact is, that market's been pretty battered, I'll say. But these dividend-paying stocks, these are up. These are up in ways that you can't imagine. Because you got to understand, one thing that I realized when Apple hit $1 trillion for the first time, I realized that every single other company was going to want to be exactly like Apple. And they were going to start doing things exactly like Apple. And they were going to focus on being the next $1 trillion company. And as you can see, it's gradually happening company after company. Some of these companies already passed $1 trillion. They're in the $2 trillion range. Well, if Apple's at $3 trillion, then they want to be at $3 trillion. So they're going to keep on doing whatever it takes to push themselves into the $3 trillion range. And once you understand that, it all makes sense because that's the reason why they're cutting portions of their workforce. That's why they're trimming down on expenses. That's why they're focusing on paying off debt. That's why they're doing stock buybacks. That's why they're doing stock splits. Because you got to understand, when these companies do these stock splits, what they're trying to do is they're trying to pull more people into investing into them. Because they know that when they do stock splits, people get excited. And when people get excited, they're more willing to take money they otherwise would not have spent, and they're willing to put it into the stock market. Especially when you're talking about kids on Robinhood, and you're talking about people who've gamified the stock market, or apps that have gamified the stock market, like Webull and Trust Wallet and shit. So the reality is, they do these stock splits because they're trying to pull more investors in. And these people all around the world normally would have been spending that money on something else. But now they're putting their money into the market. And once that money's in there, especially if you're talking about dividend-paying stocks, there's really no money. There's no need or there's no real desire to take that money out, because dividend-paying stocks pay dividends, So that's just what basically I had to say. So that's basically all for now. NVIDIA is $1 trillion. I knew it was going to happen, but I never imagined it would happen this fast. So congratulations to Jensen Huang. And, congratulations to everybody who, bought NVIDIA video cards and bought NVIDIA processors and this, that, and other in their laptops. And that's it for now. So, happy trading.
To be continued.